Welcome to this month's economic recap for October of 2023. My name is Shiraz Ahmed, and in the next 5 minutes, we're going to dive into some critical developments that have been making headlines in the financial world. Now, our topics today are going to include interest rates, the stock market, earnings, real estate, gold, and let's not, of course, forget the economic impact of this current conflict in the Middle East. Okay, in the end of September of 2023, the US saw the 10-year Treasury yield surpass 4.6%, raising concerns about the market impact alongside persistent inflation worries. Expectations hinted at a potential cooling, but possibly at higher levels. Now, long-term rates reached a 16-year high, affecting housing and, of course, spending. Now, meanwhile, the Bank of Canada is expected to maintain rates due to lower inflation and sluggish growth. Recent data, including soft retail sales and business pessimism, suggest steady rates to control inflation. Now, in September, the inflation rate edged down to 3.8%. Despite efforts, higher borrowing costs affected Canada's economy, leading to a slight GDP contraction, housing market slump, and higher unemployment numbers. Now, the Bank of Canada raised rates 10 times between March of 2022 and July of 2023. Governor McCallum may leave room for further rate hikes at their upcoming decision. Now, note, this is as of October 22nd, 2023. Now, in October 2023, the North American stock market faced significant challenges. Canada experienced an economic slowdown, potentially ending the Bank of Canada's rate increases. Now, the Bank of Canada was expected to keep the benchmark overnight rate at 5%, but uncertainty about inflation kept this possibility of future rate hikes open. Now, in the United States, the S&P 500 hit its lowest level since June. Now, the Dow Jones erased its yearly gains, and the CBOE's volatility index, or the VIX, surged above 20 for the first time in 4 months. Now, this turbulence was triggered by a surpassing increase in the US job openings, leading to concerns about high inflation. Now, hedge funds turned risk averse and retail traders soured on this sentiment. The market showed signs of stress, including a high put-to-call ratio and concerns about meeting high earnings expectations. Okay, now in the real estate world, in October of 2023, the US real estate market struggled with soaring mortgage rates and limited inventory, marking one of the slowest years since the Great Recession. High home prices and peak mortgage rates at 7.57% created hurdles for buyers, leading to an 8% year-over-year drop in pending home sales and a 14% decrease in available inventory compared to this time last year. Now, for Canadian real estate, our data is limited to September, when the Canadian Real Estate Association reported a 1.9% decline in home sales, mainly in Vancouver and Toronto. Now, they also anticipate a 10% sales decrease compared to this previous year, with the average home price index at $753,900 in September, marking its first decline since March. Now, this followed the Bank of Canada's summer interest rate hikes, which slowed the market, and the Office of the Superintendent of Financial Institutions, or OFSI, warned of potential risks to the banks. Now, more recent information of October may be available in the future. All right, now on to gold. The gold market saw significant fluctuations due to geopolitical events and economic factors in October of 23. The year started quietly for gold, with flat performance from March to May, offset by losses later. Now, in September, there were 4 consecutive months of outflows from gold ETFs, signaling reduced investor interest. Now, headwinds included receding concerns about US economic slowdown, surging bond yields, strong equities performance. Now, the turning point really was, unfortunately, the conflict in the Middle East that started in October, now causing a sudden $37 increase in gold prices. While this 2% increase might not excite gold enthusiasts, it was seen as a catalyst for future growth, with investors closely monitoring the situation. This demonstrates how geopolitical events can significantly impact commodity prices, especially precious metals like gold. Alright, now let's talk a little bit about the economic effects of the Middle East conflict. Now, in October, the conflict had widespread financial implications. Oil prices surged due to concerns about supply chain disruptions and regional instability, with Brent crude and West Texas Intermediate oil prices really spiking over 3%. Now, investors closely watched the situation. Currency fluctuations like the shekel's decline affected international trade. Now, the conflict added complexity to the oil markets due to the potential supply disruptions and price volatility. Central banks and policymakers assessed the impact on monetary policy and inflation. Political motivations influenced oil production decisions in key nations, impacting global supply and prices. Geopolitical events, including the conflict conflict in oil-rich areas heightened uncertainty in energy markets, posing challenges for investors seeking stability. So to conclude, in October of 2023 was really a month marked by significant developments in the financial industry. Now, rising bond yields, concerned about their impact on the economy, geopolitical events in the oil and energy markets captured investors' attention. The stock market demonstrated really resilience, driven by positive corporate earnings, while concerns about major banks' earnings and economic effects of the Middle East conflict are really looming at large. Inflation and monetary policy remained hot topics, with the Federal Reserve taking action to address rising prices. Now, staying informed and understanding these intricate interplay of these factors was essential for investors and financial professionals alike. As we delve into the events of October of 2023, it becomes abundantly clear that political conflict often has a profound impact on the lives of everyday individuals. Now, it's critical and crucial to remember that these are tumultuous times, and it's ordinary people who often end up bearing the heaviest burdens. Now, the livelihoods, the dreams, and aspirations are intricately connected to the decisions made in corridors of power. Let us never forget that in the face of political conflicts, it is the resilience and strength of ordinary people really that shine through. Now, our hope lies in a future where the well-being is at the forefront of political decisions, and of course where peace and understanding will end up prevailing. I want to thank you for joining me in this comprehensive recap of October of 2023. Please stay tuned for more insights and analysis, and of course, stay safe out there, everybody. Take care. Bye for now.